Kyle Hunter here, aka the Hunter of Dividends. Welcome back to the YouTube channel. Appreciate all of you joining me. Um, have a lot of fun doing these and trying to help people as we grow this passive income through dividend investments. I think it's the most passive form of income you can get. Might as well invest in your future and try to improve things for yourself, your family, and everyone around you. So let's try to look at a couple dividend stocks that I already have in my portfolio. I've done videos on both of these. I wanted to do a quick update on both Verizon and TROW price. That's ticker symbol VZ and TROW. Verizon, here you look at the last year, it's just been kind of a slow, steady decline. Recently, it's hit its 52-week low. I've been consistently buying more Verizon here in recent weeks, dollar cost averaging in this. I'm happy with where I'm at when it comes to Verizon. I think Verizon is not an exciting stock. I don't think there's anything about Verizon that would make you just want to run and go get it. There's no big growth. I don't expect big dividend growth, but I wanted to say, look at what Simply Safe Dividends had to say about Verizon. 87 for their Simply Safe Dividend safety score. That is a tremendous number, very safe, despite the fact they have a 5.22% dividend yield. This was reaffirmed here on May 6th. The company traded down after there were earnings. They lost only 0.03% of wireless subscribers during the quarter, and losing those subscribers in the first quarter has not been uncommon for Verizon. So I think this is a little bit of an overreaction from the market. This is one where they did lower guidance for the year, flat earnings, macro factors, inflation, rising interest rates. It could be a little bit more volatility for the stocks as Simply Safe Dividends. But look, this is a company that has debt, but the debt is at a fixed lower rate, more than 75% of it. So there is some insulation from rising rates, certainly, as I talked about in my previous video here. The other thing to point out is that it's a very safe income stock. Just a really good opportunity, like they say, now may prove a prime opportunity to consider Verizon with the stock trading at decade low valuations. And just as you see here, a brief look at Verizon, it's a 5.22% dividend yield trading at 9 for a PE. And the payout ratio is only 47%. It looks to be there's still room to continue to grow. It's not growing very fast. You might get a 2 or 3% dividend growth over the long term with this one. Let's take a look here at Fast Graphs, a great tool that I've been using here just in the last week. Chuck over at Fast Graphs on the YouTube channel does a great job showing all the tools that they have. Historical averages, it's usually traded about a 13 PE. Right now it's at 9. And if it traded at 13 PE, the price would be in the 60s, about 67.50 by the end of 2022. 71.97 there by 2023. Let's forecast this out in the future. Look at earnings estimates. It still shows, again, that this is quite a bit below the average. If you look at an annualized rate of return through the end of next year, if this would just go to its historical averages, 23%, really tremendous stuff. That's on diluted earnings. If you look at free cash flow, this one's a little bit noisier here. Long term, it still looks like a good value when it comes to Verizon. And then operating cash flow, wow. I mean, just a really fantastic chart here that shows how lowly Verizon is being valued at this point. Sales is another one I like to look at. Sales, this one looks like it's more at about fair value, maybe just a slow rate of return here going forward, mainly from the dividend. So it's fascinating to look at many of these. I do recommend fastgraphs.com is a really good tool. I think Verizon's too cheap right now, guys. I think this is one that I understand there isn't a lot of growth. I don't think Verizon's going to be this massive, winning story over the next 10 years or something, but it's paying 5.22%. Good luck finding rates like that at your local bank. And it looks to be undervalued at the same time. So if we get some reversion to the mean in the stock price, and then also get the dividend at the same time, I think it could be very good. So let's take a look now at T. Rowe Price. T. Rowe Price is one that I like a lot as well. I think T. Rowe Price, this is really getting overdone. I mean, this thing is down 50% from its highs, nearly 40% drop. And really, it's been in 6 months. Drastic drop. Reason here is T. Rowe Price, asset manager. It's mainly growth oriented. T. Rowe Price has a lot of the high growth funds to where they're seeing more outflows. I understand that the stock should be down, but at this point now, T. Rowe Price is yielding about 4%. And if we look at T. Rowe Price here, I did want to look at the latest news from Simply Safe Dividends on this one, because just like Verizon, they reaffirmed T. Rowe Price outlook 94 very safe for a dividend of 3.96%. This is one of them where it says that since the depths of the pandemic and the 2008 financial crisis, this dividend yield has not been like this. It's certainly heavier exposure to the growth-oriented equity, as I was mentioning there before. But, this is one where they have a strong track record. They don't have debt. I think T. Rowe Price has done a tremendous job with their balance sheet. As they say here, the balance sheet remains pristine. No debt, $2 billion of cash, $2.9 billion of investments. And for context, the dividend costs about $1.1 billion annually. They got a lot of cash. They got a lot of cash flow. If equities continue to drop, especially the growth stocks, it could dip a little bit farther. If it does, I'm going to buy more T. Rowe Price. I think this is a good long-term one. Really good reputation. Long-term, this company's done a really good job. We're getting a PE ratio of about 11. They say we expect T. Rowe Price and its dividend to weather almost any storm. The stock may be worth a closer look for those who are comfortable with T. Rowe Price sensitivity to fluctuations and the murkier long-term growth outlook for active managers. So, in my opinion, T. Rowe Price, at this point, with the dividend growth we're seeing, just massive dividend growth here. In fact, the CAGR 15% in 5 years. I don't expect this to continue at 15%, but there's a lot here that shows you that they do have room to grow this dividend some more. It's been in the upper 30s as far as payout ratio, the earnings per share. They're going to dip a bit here, but look at the uptick there in the long term. This is a well-run company. I think it's really being thrown out. So let's take a look at it quickly here on fast graphs for the historical averages. Historically, this appears to be undervalued again. At a 15 PE, it would be in the 160s. At its normal PE here, 15 and a half would be 171. If you take a shorter term look at it, you're going to see the same thing. The blue and red line looking like this one should be trading at a higher price than it is right now. Let's look at forecast estimates, much higher than what it is right now. An annualized rate of return in the next couple years of nearly 20%, just on the average. Based on earnings, let's look at sales. This is one where, again, sales is trading so low. Even if you go toward the very lowest sales guesses here, you're going to get an annualized rate of return of nearly 8%. Nobody would complain too much about 8%, especially in this environment. So the earnings look good. The operating cash flow, there are no estimates for this one. Let's see if free cash flow is available here. Yeah, free cash flow, just outrageous, outrageously low valuation. If you look at this, the very lowest pricing, even with that, this is a nearly 10%, 11, 12% return on your investment. And if you go to the average, this is looking at something like 68% rate of return. So, in summary, I think T. Rowe Price is undervalued by quite a bit here. I like Verizon as a safer play. I like T. Rowe Price as a long-term dividend growth play. I will be continuing to invest in both of these names. Are you buying Verizon? Are you buying T. Rowe Price? What do you think of these two stocks? I want to hear from you. Drop it in the comments below. Give this some thumbs up if you appreciate it. If it's helped you out in any way, I certainly hope it has. Love doing this, love being part of the dividend community. So thank you to all of you out there who are part of this community as well. Give this a thumbs up, subscribe to the channel, follow me at Hunt Dividends on Twitter, where I post a lot of information there as well. And I look forward to doing some more videos as we come up in the future. If you have any stocks that you would like me to take a look at valuation wise, drop those in the comments below, and I'm happy to look at those and do a video on those as well. So everybody have a great week, and let's keep investing and building up those dividends.